Thanks for joining us. I'm Marlon Bowling with a look at our ag commodity trade today with a little extra help from Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Brian, what's the outlook out your back window there? Are they able to get harvesting done today?
A lot of harvesting taking place here in the next several days ahead of some rain that's forecasted for the weekend. It's going to turn much cooler and bring some rain chances along with it. Of course, there's good rains falling in the northern parts of Iowa, southern Minnesota, along that corridor there, kind of slowing things down, but a lot of progress being made across the heart of the Midwest.
All right, we had the crop condition update that came out from USDA yesterday. We also had harvest progress numbers. The harvest progress, for the most part, is running ahead of its average pace out there. There is going to be a little bit of a slowdown, as you mentioned, in the northwestern Corn Belt here, but all things considered, how hard is that going to make it here to get any kind of a rally over the next few weeks in the corn and soybean trade when you have the depths of harvest right upon us right now?
Yeah, we're not seeing a lot of farmers selling as they combine their corn and soybean crops. A lot of the selling is coming from more speculative entities. The large traders, or sometimes it's called the funds, are selling as we're making new lows in both the corn and soybeans. So they're adding to their short positions. The farmers we're talking with are more content to hold on for better prices, put it into storage at first, and hopefully we get some sort of an agreement reached with China before they're forced to make sales. So if we could see a little bit of a recovery in prices where we don't drop to new lows, where we could maybe stabilize and start to bounce, maybe it occurs because of a wet forecast that won't allow any harvest to take place, we could see a little bit of a short covering rally, as a lot of it is large trading funds in the market right now.
We were talking about it earlier in the broadcast, where yesterday we discovered there was some cash corn out in the plains under $3 and soybeans well under $7, and that kind of takes the incentive away for farmers to make cash sales unless they had something forward contracted that would have the appearance that it's going to kind of shut down the spur of the moment sales, if you will. I want to take a look at our current futures trade here, Brian, and get everybody updated on latest trades from Chicago. Now, on the corn market today, we have had a weaker go. We have December still down 4. We're at 344 and still on the low of the day. We have the soybean trade on November, currently trading at $8.15 per bushel. That's down 8.25 cents right now, within a penny of its low of the day, a dime off our overnight high again. And in the wheat trade, we have the Chicago December contract 3 3/4 higher. We're trading at $5.10 per bushel, while the Kansas City market has December now trading at $5.15. That is up 2.25 cents. We'll come back in a moment here, Brian, and focus on our livestock trade when we come back right after these messages. We're talking with Brian Hoops of Midwest Market Solutions. He's based in Springfield, Missouri. And we're going to turn our focus now to our livestock trade. And on the live cattle market right now in Chicago at the CME Group, we have had a weaker tone throughout the morning so far. Right now, you have your October contract clawing its way back to unchanged. It's at 113.42. And now you have December. Look at this, a dime higher at 118.20. So it's off of its earlier low by about 60 cents or so. We have February now 15 lower at 122.15. So straddling the fence, as they say, in the live cattle market right now, narrowly mixed. On the feeder cattle trade, let's flip the page, and we have the October contract just 8 cents lower now at 159.10. So we're almost $1 off of our earlier low this morning. Coming back here, Brian, November now 27 lower at 158.75, and back within about 15 cents of its high of the day. Meanwhile, the lean hogs, as we mentioned earlier, a big rally in the nearby contracts. October up over $2.50. We're $2.55 higher at $59 even, and December lean hogs now up $1.32 at 56.70. So obviously, it looks like different dynamics at work here in the beef and the pork side of the industry today, Brian.
Yeah, the one thing they do have in common was a big surge in cutout values yesterday afternoon, and the pork complex is reacting to that, along with the much stronger cash bids around the Midwest. And I think once we get the plants up and rolling in North Carolina, which could be some time before that happens, we could see cash markets surge even further. But the cash cattle trade really non-existent right now. You would think with the cheap corn prices, some more rain that's in the forecast for the plains, that's going to shift some more demand for feeder cattle, and they would take another run higher. So it looks like a little consolidation right now, a pullback from its most recent highs in both live and feeder cattle, and I think they should take at least another run. But there is a cattle on feed report out on Friday as well that looks to be a little bit negative for that market.
You think the trade will be flat ahead of that report then?
Yeah, I tend to think we're going to be real flat because there won't be much cash trade until we get to that report out on Friday. The report looks to be a little negative, 5% more on feed, 4% bigger placements than a year ago. And until we get to that time frame, I think it's going to be hard to sustain momentum, any rally momentum, despite the fact that we should have better cash news and higher cutouts this week.
With all the talk of swine fever in different parts of the globe, is this a long-term, and I mean a really long-term bullish scenario for the hogs?
I think that's the way I have to look at it, especially those deferred contracts have rallied, putting in a pretty large premium, anticipating that this is going to be very positive for our pork products. I think once we can get to renewed agreements with China, we're going to see better interest in our product for that country as they're hit with the fever that has slowed and in a lot of cases increased kill capacity.
Okay, well, thank you, Brian. Brian Hoops of Midwest Market Solutions in Springfield, Missouri.